All right, guys, let's do it. It's noon, probably, well, a little bit afternoon, but I was trying to get the audio working as far as you guys being able to hear what I hear, and I couldn't get it to work, so whatever. What do we got going on today? We got a recap of the week, new positions. I'm going to go over new positions I moved into. I'm going to go into positions I may have exited. I'm going to go into a breakdown of what I'm watching going into next week. And as well, I'm going to do a little bit of due diligence towards the end. As always, guys, if you have anything that you want me to take a look at, well, I'm here. Feel free to throw it up in chat. Let me know what it is you'd like me to take a look at. Otherwise, I'm just going to go through this process and see where we're at. So, for the week, ACRX, DMPI, MFA, all of these were here, guys. I did take a position in IMMP into the weekend. I was kind of humming and hawing about that, as well as TSC East. This is a Toronto Stock Exchange stock, guys. There is an OTC, but the reason why this was interesting to me is it was an extremely small company that has received FDA approval on their hand sanitizer. So I know hand sanitizer moving forward is just going to be a standard pretty much everywhere. So when you've got an FDA approved hand sanitizer for the States right now, with demand being what it is, I think this tiny little stock has some room to move. IMMP again, the position is on the ASCO this weekend. So pretty stoked about that. SPL and EPR versus an ETN. SPG. Okay. Yeah, I can definitely take a look. Let me pull up Koifin here. SPG. So Simon Property Group versus something like I'm wondering, is there a, let's go to markets, today's markets. XLRE is the real estate one. So let's pull that up alongside. So let's do XLRE and add in SPG. Okay. SPG is the top one here, guys. XLRE is the bottom. XLRE would just be kind of an overview of the real estate industry with little bits and pieces of everything thrown in there versus SPG directly. So one of the things that I've got, guys, with any kind of ETN, ETF, ETC, any of those, is you are getting a general snapshot of the thing as a whole. So if the sector as a whole you see recovering, then an ETN and ETF might be the right way to go. Unless you want to really dive in and do your due diligence, break down what's in that ETN, SPG versus BKNU and RGU specifically. Okay, so let me get rid of XLRE here, and I will um, put in BKNU, and we can compare the two. Okay, no search results on BKNU. Energy U energy. Energy is the X is hmm. I don't know. BK and BlackRock investment. Um, so the first thing I would say is compare apples to apples, man. Yeah, I would compare apples to apples. BKN is the BlackRock. NRG seems to be an energy sector. I would go with something like XLRE if you're going to take a look. And that's apples to apples where you're still in the real estate versus real estate. Okay. So just for the sake of this, I think that's what I'm going to do is break down XLRE against SPG so that we're staying in the real estate sector, right? It doesn't really do you a ton of good to go, okay, well, what's better, SPG or something like the tech sector, so or the SPY as a whole. You want to really make it specific, I think, to the same industry. So what I'm looking at here is, let's go to the past 6 months, okay? And what you're seeing here is SPG at the top, up and down, up and down, up and down, up and down. So one of the things that I like about XLRE versus is what you're seeing here is like we've got a dip, but the slope of the dips is really what is kind of staggering here, where the XLRE gives you that benefit of it not being as drastic to one side or the other. Now, both of them seem to both rise and fall. XLRE seems to tail SPG in a little bit. So we see this drop happen, and then we see this drop happen. But the bottom on this drop follows. It lags the bottom here. So we see, like right here, you see how this is done declining here. This is not. This continues to decline. Microsector TM US Big Banks Index 3x leverage. Yeah. So my general rule of thumb with, and again, guys, this is a disclaimer, not financial advice, completely my opinion. 3x leveraged anythings, I don't go near. I would never put my money in. I would never recommend. I would never, if somebody wanted, what are your thoughts on it? 3x leverage, you lose your ass too quickly. So I play long equity bio stocks. For me, bios is volatile enough that anything that's 3x leverage is like, I'm not a huge fan of that. So with this, what you're seeing is this is lagging behind. So you could actually probably use SPG as an indicator. It seems to do it fairly consistently. So we see a rise here. This is the peak. And then shortly after it here, XLRE is caught up. And then again, we hit a bottom here. Now this time the bottom does coincide here. The top is coinciding. I see a slight dip, but it's nowhere near as drastic on the XLRE. Again, a peak. These seem to rally together. Slow decline. They rally together. So if anything, what this is going to give you the ability to do is take a look at SPG and go, okay, well, the movement's here, and it's either in sync with XLRE or slightly preceding XLRE, which may make it for potential for a play, actually. So while I don't typically enjoy these ETFs, I like to do the due diligence, break down what's in them, and actually get a feel for what's going on. I think that in this case, putting these two side by side, what I'm seeing is a trend over the last 6 months of any kind of movement is less exaggerated on the XLRE. So I'm not sure if you're looking at an options play or an equity play on this, but with that being said, it looks like you can use SPG as an indicator of either the movement or the preceding movement. What is up, Cybot? How you doing, man? It's creepy. What are those eyes, man? Oh no, there's a face. Oh, this is not going to end well. Does he have a tux too? Do you have a whole body for that, or that's creepy? Oh, those emotes are creepy. All right. Yeah, but that's that. No, I always stream Saturday at noon just to review my positions, what went well during the week, what went poorly during the week. So let's open up TD here. Maybe I'll do it this way. Maybe I'll go. What's up, Sanui? Let's go here. Let's do this. Let's do this. Let's do this. Let's do this. Go here. Okay, so let's do this. So here's performance over the past, again, you can see over the last month. We're seeing a 36% increase over the last month across the portfolio. Last week was down 5, but that's okay because we're looking at the cancer plays coming in. So we're over the last month, we're still up 36%. So that's fantastic. That's what I like to see. What's up, Chiefy? And there's a cat. About being in an REIT. Now, REIT is interesting because I actually do have a position in an REIT. My tip ranks, open that up. My tip ranks portfolio, where is it? MFA. So I'm in MFA, and I actually like MFA back up into that $5 range. I think that this has the room to go 500x. But now again, with the MFA, I have done a deep dive into what they own, what they're looking at. They do have some agency backed or agency approved mortgage-backed securities as well as some non-agency, so they're a good blend of both. With default rates being much lower, forbearance rates being much lower than what we had expected, I think that's good for REITs. But again, you definitely need to know what you're holding as far as an REIT goes. If you're holding an REIT that is affected by strip malls, forget the protests that are happening right now. That may affect strip malls in the short term, in the interim, but ultimately in the long run, the retail sector is hurting in a big way. We're seeing a lot more of Chapter 11s come in from guys like Macy's. Nordstrom is hurting. There was another one that was really bleeding out. I can't remember the name of it. Anyway, retail sector is hurting in a big way, which means those strip malls are going to get hurt in a big way, which means those REITs holding strip malls are going to get hurt in a big way. So be aware of what's in your REIT. Is it residential? Is it commercial? Are they strip malls? Where are those malls located? So SPG, all Simon malls, and EPR specialty realty. Yeah, so SPG would be one where it'd be like, don't want to go near it. If all it is malls, no thank you. Completely uninterested as we see more and more of these bankruptcies fall in line. Now, that, just to give you guys a heads up though, if you could find a retail REIT that was specifically in New York, let's say it's a Times Square REIT, right? That may be something for me to actually look at. I don't know that I would shut that one down nearly as quickly because I think that that property will always be highly sought after. So hopefully that makes sense, guys. But yeah, so the only new position I entered was iPix this week. Not iPix, I'm sorry, IMMP, Immutep. I saw good potential in them. It wasn't a huge position I took in. It was just a small position over the weekend. We'll see how it performs headed in. I am okay with the portfolio being down 5%, guys, on the week, because overall for the past however many months, it's been a solid rise. So, yeah, pretty happy about that. So I guess I got to start converting that number. I should know that number off the top of my head because I always tell people, okay, well, I started with 3 grand in January and now here I am, but that was 3 grand Canadian. So let's go here. Okay, so a little over 2 grand US. So we started with 2 grand US in January. We're finally up to around that 18,000 mark right as of right now. So decent growth. I'm still seeing decent gains on this portfolio. These numbers here, I just put my numbers into tip ranks, which is why it's not really, if you were to go to my public portfolio or my performance, it's going to show poorly because I just put this stuff in this week. I didn't put it in as of when I took it. So a lot of these plays here are not going to show as well, which is fine. I'm okay with doing the work now and seeing this grow over time. But yeah, at least the portfolio details are here for you guys. If you are on Twitch right now, you are able to type in portfolio. I believe this should work. I tried to put this in place here, so we'll see what happens. There you go. If you guys ever want to check this out, that's there for you to check out as a command. What route do you think this week is going to start at? Green or red? Okay, so here's the thing, guys. People are really just up in the air right now about what in the world is going on. That Hong Kong announcement to end the day on Friday, the market, this is the response that we're seeing. And I think that sentiment is going to continue. And here's why. If Hong Kong becomes China and is recognized financially as part of China, all of the US dollars that have been hiding in the Hang Seng and hiding in Hong Kong to try to be tied into the Asian market are either going to make a move to Tokyo or they're going to come back to the stateside. And I think it's not going to be everybody goes to Tokyo or everybody goes to the US, but we're definitely going to see some employers, some businesses, and some cash flow come back to the US. We're also going to see people pull out of China stocks again. So what I really am expecting to see next week is this rise back up on the SPY from 304. I don't know that we go back up to this 330 range, but I definitely think we start looking at that 310 throughout the week. So do we open green? I'm not sure on that yet. We'll wait and see because China's still going to give us an official response. I think China's official response is going to be thank you. I know that surprises a lot of people, but I genuinely think that they are going to be thankful that the US has taken the position of Hong Kong belongs to you now. Here you go. And with that, we are revoking any rights at Hong Kong, special privilege with the US dollar, with trade, with embassies, et cetera, et cetera. So I really do think that at the gate, who knows what we're going to see as far as the first 15 minutes of Monday, but throughout the week, I think we're going to see a steady rise to around the 310 area. Again, just my opinion, but based on what I'm seeing here, I think that's the way it's going to be. Another thing that you guys want to watch really closely is the UK. The UK and Hong Kong had very strong ties, and right now the UK has said that they're going to open their doors as far as immigration from Hong Kong to the UK. So another place that a lot of these businesses may look to go other than the US is into Britain. And that's a huge boost for the UK. For them to make deeper ties with China would be phenomenal for them. And it would also buffer them a little bit from any retaliatory principles from the EU on Brexit. There's one thing that the EU doesn't want to do right now is piss around with China. It doesn't want to piss off China. And if England and China continue to build stronger and stronger ties with one another, I think that causes the EU to put the brake on being total jerk-offs. What sectors do you think will see the best performance this week as states are reopening? Okay, so things that I'm looking at to do well this week are casinos in a big way, not casinos that are tied over to Asia. So Macau, Wynn, get out of there. I don't like Wynn going into this week. Things that I do like as far as the casino sector goes would be CZR. It would be LVS. It would be Penn. I think we see these do well this week, guys. These three here. As you can see, Penn actually had a nice little rise towards the end there, but I think that Caesar and LVS are going to be seeing something like that on Monday as well. The other thing that you want to look for moving forward on this is potentially airlines, potentially hotels. And retail, of course, with the economy opening back up, you can expect to see retail do well as well. So those would be sectors that that you might want to watch. For me, I'm just in buyout, so Monday will be the big day for me as far as moving positions around or exiting positions, depending on what we see come out of the ASCO. MGM could be another one. Yeah, MGM would be fine. The only problem that I have with MGM is they're more international, right? So MGM stands to lose as well on this Hong Kong China thing. So just be very clear on that. Thoughts on the CZR sale? So I don't do a lot of deep dive into casinos, guys. My thoughts on CZR selling anything? Let's open that up and actually get a breakdown. So I'm not just giving you conjecture. CZR sale. Okay, so what we're talking about is the sale of Rio to Imperial Companies. Okay, so this is the Rio Entertainment, All Suite Hotel and Casino. Okay, so the good thing about this is they cut overhead, they cut costs, they cut bleeding dollars out of their back end. I actually really like this move for Caesar. Right now, when you're trying to build things back up and you're trying to slowly come back into this and show profitable, this is exactly the kind of move that you want to see. They're not firing people, they're not closing down the hotel, but they are able to create some liquid capital by selling this off, which helps their bottom line and allows them to do a better job focusing on their own casinos. So I like this. I really do like this play. I think it's good for Caesar. Now, as for me, guys, I'm not going to get into this. I'm not going to touch it, just to be clear. If it's not long buyout, I'm not playing it. That's one of the rules that I put down in February. It's one of the ones that I'm going to stick to throughout the rest of the year. This year is all about long buyout for me, and it probably will be moving forward. I may next year look at diversifying my portfolio and including an additional sector, but for right now, it's just going to be buyout only. So while I wouldn't take a play on this, if I had to put a 12-month estimate on where Caesar would be, let's open this up. 12 months out, I see Caesar probably around. Okay, so pre-drop, let's go 6 months. Okay, so they're already back up to pre-drop levels. 12-month, I would give it a 14 to 15 range, but let's say 14. I think that's probably reasonable. Where does that put me in comparison to 14 would be there? Yeah, I think 14 is a reasonable 12 month. ERI is buying Caesar. ERI, Caesar. Merger. May 12th. Okay, 17.3 billion casino, ERI, Eldorado Resorts, and else plan to acquire. Blah, 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 blah. What nobody could have anticipated was all of those resorts and casinos, blah, 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 yada, yada, yada. ERI. Okay, so what I want to know is on this, Eldorado Resorts, what are they holdings? What do they currently have? Yeah, I wouldn't go long on Wynn given what we just saw with Hong Kong because their Macau casinos are they're gonna take a hit on that for sure. Um, okay, so I mean, even with this, so CZR gets rid of Rio and they make their portfolio that much more appealing. ERI acquires Caesar, so they're bringing in a more profitable company. That would lead me to believe that we could see this back up around. Okay, so this is 1 year. That's the dip. I would give a 12-month of 50 on this. I think over the summer we see a lot more hotels picking up as people do domestic travel. I think 50 is a 12-month on this is reasonable. Uh, yeah. Okay. Dashboards. Let's go here. Okay, so Lily's looking good. They got an approval. They've got their ASCO conference news there. DGX can come off this. That wasn't one of my picks. That was just something that we were looking at on the morning call. AZN still looks good. Sanofi still looks good. Get rid of that. GME. GME is a long play for me into Q4, so that doesn't really have a ton of news yet. Now, to watch on GME, guys, is on the 8th. They will come out with their Q2 earnings right here. So this may be a potential entry for you this week. GME is currently sitting at 406. Pre-crash, they were 5 something. I don't think that bridging this gap is going to be overly difficult. You can see that they were up around here. We had record sales in Q2 on video games. GME picked up their online sales by 1,500%. That's right, 1500. Put that in chat so that people aren't losing it. But GME, 1,500% increase online sales, and that's largely due to their curbside pickup option. which I don't think is going to get any weaker. And then you take these phenomenal Q1, Q2 results from GME and steamroll those into next gen consoles dropping in Q4. I think this is an extremely strong position. There will most likely be some Nintendo consoles, some Switches coming to the US in the next little bit as they try to cash in on the economy reopening. So expect to see that help GME as well. They do about 26 to 28% of their sales are Nintendo products. So more Switches means better things. With them having lower percentages of sales in Sony and Microsoft products as we move into new consoles. While people may be buying their games online for those consoles, the consoles themselves and the hardware that comes with it, you have to buy directly from somewhere. And typically, guys, no matter what, when next gen consoles come out, they sell out absolutely everywhere. So people say, well, what about Best Buy or what about online distributors like Amazon? Aren't they gonna do better as far as sales goes? Everybody's gonna sell it. Everybody's going to sell out of their consoles. It happens every single time new consoles drop. There's not enough. There never will be. Sony has made the whole market aware that they are already planning to distribute less consoles than they normally do. So whatever the price point, for me, if I'm looking at a 12-month forecast, I'm not going to give you guys my pricing on entry or exit. I will give you my 12-month forecast on this. I think I like it around this mark up here, actually. This $8 mark. Seems very reasonable for me headed into Q4. So that's the play there. That's what I see. That's what I like. That's why that's in my portfolio. When you guys are hearing me say bio only, that's where I am. That's where I'm focusing and living. GME is an exception to that because I see the potential in the play, and it's been backed by well, first of all, me breaking down their 10K, looking through their filings, looking through news in the industry, pairing that with a guy like Michael Burry that says everybody may hate it, but he loves it. Michael Burry, for me, is a big check mark. When he takes a look at something, it means that I want to take a look at something at the very least. I'm not saying it's always a play that I want to get into, but in this case, I like what's there. The board vote as well on GME will be important, so that's there. MFA, guys, MFA, again, the REIT that I am holding, I do see MFA returning back up to this $5-6 range in 12 months. So for me, this is not a position that I think I will exit because they did have a 10% yield dividend. So my hope is to just buy up a bunch of shares while it's down here, let it rise on the growth, and then collect the dividends over and over and over again. This will be the start of my drip portfolio, I believe. So everything else that's here, Seal is a good long play. I am not currently in a position, but I am eyeing an entry on it. MBRX got unhalted. It had a great 12% gain on Friday. This thing just continues to run, I believe. Whether it has its COVID or not doesn't really concern me. My big focus is going to be for sure. My big focus on MBRX is going to be on the brain cancer. But the coronavirus, the COVID stuff actually just makes it that much more appealing for me. So that's it, guys. That's what we're looking at. I didn't add any other positions because this is a long equity portfolio. Typically, you're not going to see as much movement throughout the week as you would on some of the other traders out there. So that's there. As far as news, I'm going to open up my scanners and see what we've got. See if there's anything that's really jumping out. Lululemon gets an analyst upgrade. Avis Cars gets an analyst upgrade. Caesars gets upgraded. mRNA doesn't matter. I wouldn't go anywhere near mRNA. It is the least appealing of them all. Yeah, mRNA does not appeal to me whatsoever, especially when you've got a big beast like Pfizer saying, oh, by the way, we think that we could be ready by October. mRNA is not something that I like. I like iPix better for that. I like MBRX better for that. And that's where I put my portfolio as far as COVID goes. People who are on the Stock Guy morning call, shout out to the Stock Guy here. Throw that in chat. Shout out to the Stock Guy. His morning call that I'm a part of on Discord. You may hear me speak to some of these COVID stocks just for people to have an FYI what's going on. But as far as me saying I really like this one, I like the direction it's going, I don't. For the most part, you're going to hear me say it's too late for the game. If people are just trying to get into this now, it's too damn late. Companies like Sorrento, I'm surprised Sorrento is still trading. I would predict that they've been halted on fraudulent claims. I really dislike this company. I think what they did was criminal. DraftKings and Zynga both performed well. For those of you that are unfamiliar with the talk that we did on that, it was actually on Martini's stream, so give her a shout out too. Martini Rita. She and I broke down DraftKings and Zynga. We saw some positive movement on both on Friday. This is on the theory that We are now in a time where greed is actually expanding beyond fear, and people are looking to get back into their luxuries and their leisures. So Zynga is the other one here. Let's take a look at both. Okay. So as you can see, let's go to month to date. Zynga started at 7, is now up to 915. DraftKings started at 19, is now up to 39. So both of them did quite well. I was pleased with the analysis that we had on that. Martini and I both seemed to nail that one right on the head. So pretty happy about that, guys. What do we have as far as acquired or acquisitions? I'm not seeing anything. FDA approved. Lilly got an approval, so we were expecting that. FDA for treating Serturo, Johnson and Johnson. So this is J&J play. Anytime you see something for children, anything that's pediatric, those are extremely difficult to get approved, guys. So in the biosector, you want to keep your eyes out for that. Is it too late for that one? I had a price at 40. Where is it now? Yeah, it's around 40 right now. So I don't know that I would throw any more towards DraftKings. The moment. I think that this is a reasonable level for it to be at. But again, valuations on these stock guys, some of them just make no sense to me. If you want to see a stock that I absolutely don't understand why it's valued at what it's valued at right now, this one right here, Peloton, don't get it. Exercise bike with a screen on it, and there's lots of people out there that seem to love this thing. I personally can't fathom for the life of me why this thing is worth $40. I would have it down at 20 maybe. This is another one, VTIQ. You guys will see me break that one down on YouTube. The replay is there where I broke down VTIQ and explained how this thing is a total dog turd and is worth nothing. But currently it's trading up at $30. So this thing is a joke. This is a giant meme. People are saying this is the next Tesla. It is not the next Tesla. This thing is a dumpster fire. And I wouldn't want to go anywhere near it. Let's go over here. Okay, so that's the FDA pediatric for J&J. Anti-cancer drug approvals are based on trials with core limitations. Injection combination for non-cyclical lung cancer. This is Lilly's approval again, so that's good. We know that. FDA approved. We can clear that. Let's go to orphan designation. We've got another orphan designation here. Hunter syndrome treatment market analysis. This is just a market analysis paper. Somebody wants to sell me something, so that's no good. Let's go back over here. No business news on GameStop. Upgrades. APTO is a biostock that got an upgrade, so that may be worth taking a look. Oh no, downgraded. So that may be a short play. What else do we have here? Bank system, financial, cars. Okay, so nothing else there as far as the biosector goes. Motley is all over the ET Energy Transfer LP. Thoughts? Okay, so Motley Fool likes energy because we are seeing some movement being made against the oil glut. My concerns in the energy industry are right now, it's not the primary concern, it's not the primary problem. First thing is first, let's get the retail sector, travel sector, tourism sector coming back up. So it's not that I don't see potential in energy, it's just a longer term play. So if you're looking for something more immediate, I like retail and hotels, depending on the due diligence you're doing, more. I like bio the most out of all of them. Energy would be something that I'm looking at more as we head towards winter, so September, October. And that's not necessarily for entry, that's for movement. So if you're looking for entry, you're probably looking at around June or July. So we're heading into the first couple weeks of June. I would say more so end of June, early July is when I would start looking at which energy stocks are doing well. Yeah, that's my thoughts on the energy sector. I do have a position in USO that I'm holding. Jets versus individual airlines. I prefer individual airlines. I think the big beasts in the airline industry are not going to perform nearly as well as the small guys as far as getting back started up again. Especially if what we're seeing is international travel is going to be knocked off the map. So Hawaiian Airlines, Alaska Airlines, Porter Air, Ryanair, things of that nature. I think that they are going to perform much better than some of the big boys out there, for sure. As far as the ETF covering the whole industry, Jets will see a slow incline, but again, I'm not a huge fan of ETFs, guys. I'm a bigger fan of do your due diligence, put the time in, put the work in, and understand what's in those ETFs, because usually the ETFs have two or three stocks that are doing quite well paired with a whole bunch of dog shit. And what you want to do is find those two or three stocks and invest directly in those two or three stocks instead of you buying Jets and just saying, well, whatever. Now, if you're a passive investor, you don't have the time to do that due diligence. I mean, Jets may be an option. I still wouldn't really tell you to go for that. I would still say take a look at individual airlines. But if you're somebody that just wants to throw something at a sector because you think that it's going to go up or down, sure, Jets is a possibility. Same thing with the energy sector, right? Energy sector, you can actually go out there and find specific solar companies or fuel cell companies you think are going to do well, like solar, or you can buy the TAN ETF. I personally would never recommend that you buy a TAN ETF because there's a whole bunch of fake green companies that are just going to blow up versus companies that are lasting, well-established companies that have great contracts. Solar being among, Total being among them. Total is out of France, but they've got a great diversity between natural gas, fossil fuels, and solar energy. So, yeah, that's kind of my thought. Typically, if you ask me about an ETF, it's going to be a negative response. I can't think of many ETFs out there that I actually would go, yep, that looks good to me. Okay. So we got some positive responses on the drug here. So let's open that up. Let's open that up. Phase 3 hero trial. Okay. So what do we got here? We got Avastin. So let's see who makes Avastin. Let's see. So Keytruda. This is Merck. So Merck, we can expect to do well. We knew that. Again, guys, my price points on Merck and BMY respectively were 85 and 65. I made those in January. I thought that we would see it drop into COVID and then we would see a slow resurgence back up. I think that that's what we are seeing happening. I had a 12-month scale, so by next January it'd be up to 85. I think it'll be up to 85 before then. But yeah, I did have a 12-month as of January saying that this would be up around 85. It's making the right movement back up there. Fairly confident with their approval on their pipeline. Yeah, and that's just it. This is a buy the dip moment, guys, for sure. But you have to be cautious as well. Just because it's buy the dip moment doesn't mean that you can't get burned in a big way. So you have to do your due diligence and understand: is a business going to go bankrupt or is a business going to be sticking around? Those that are able to stick around are going to be great opportunities to buy the dip. But ones that are going to blow up and disappear, not so much. So Hertz, for example, I wouldn't go anywhere near Hertz. Absolutely wouldn't go anywhere near. People are saying it's a buy the dip. I disagree. Um, yeah, so Merck at 85, BMY at 60. BMY is going to be at 60. It already broke through that 60 line, but again, I'd said 60 back here. People thought it was a little bit nutty. Well, it's almost there. So, now, BMY, if they start to move, BMY and Merck are both in this, what I would call a middle ground position as far as bio goes. For them to really take it up to the next level and become a Lilly or an Amgen or a Biogen, what they need to do is start developing less pipeline internally and start looking at smaller companies like these guys down here, Merck, Seal, ACRX, MBRX, taking a look at those guys and starting to buy out some of their pipelines, just acquiring those companies, taking their pipelines under their wing instead of them putting all the time into R&D and development on their pipelines. They really should just double down on they should double down on acquiring smaller companies that have viable pipelines. That's how you're going to grow a lot faster. That's what Lilly does. That's what the big players do. Is they wait and see somebody that looks fantastic, that is affordable. They sweep in, they grab it. Dr. Krager, thanks so much for following the channel, man. I appreciate that. I am trying to keep track of this, guys. I got to get a better way of organizing the second screen because it's proving a little bit difficult to try to track chat. How long do you hold these? So for me, typically it's a 6 to 18 month play. Yeah. So typically I'm looking anywhere from 2 to 6 quarters out. And again, the target for my portfolio this year, starting with 2K US, was to get it. Well, I mean, started with 3K Canadian, and my hope was to get it to 50K. So 50K Canadian would be 36,000 US is what I was hoping to be at. Now, right now we've taken the 3K and made it into my current holdings are 26,548. So we're up to 19,000. So we're not bad. We're about halfway there right now. All I need to do is take this and double it by Q4, which is why it's so crucial for me to have things in my portfolio that I'm looking at to deliver in Q4. Things like ACRX, DNPI. I think MFA will be back up there by then. I think MBRX will be up there. GME will be back up there by then. These guys here, Marker and Immutep, will probably be out of my portfolio by then. These were much shorter holds. These were just plays into the SCO, so I will probably be exiting these positions very shortly. East is a long hold for me. This is a bit of a meme play. There's very little that I have in this. iPix as well is a Hail Mary play. This is a tiny float stock, but they've got a drug that is looking like it's a 3-in-1 combo treatment for coronavirus. It could be used as both vaccine, treatment, and secondary infection killer. So each of these plays, everything from GameStop up here is into Q4. These guys are probably through into no more than the end of next week. This guy is as long as it takes. If it hits, it hits. If it doesn't, it doesn't. And then this one here, again, is another one of those of just hold it for as long as you can possibly hold it. MFA will also be one that I just hold. DMPI. So let's go. Instead of you guys trying to squint, let's do this. There you go. Everybody should have the link now if you want to go check out the Tip Ranks portfolio. That's all there for you to see. Yeah, that's the ranking that it is there, but these are positions that I took far earlier than this week. I just filled it out this week. So over the next 12 months, this is going to look like a very different animal. So I'm excited to see that I can build this out and start using this tool a little bit more. I really do love what Tip Ranks is. I love the ability to look up different experts, what their thoughts and insights are. I really love the tool. Okay. Prostate cancer, ASCO, Lupron, Relumina, and Lupron. So I know Relumina is a Japanese company that's producing that. I can't get in on that. Lupron may be something that I can. Luprolon, Lupron, treatment for endometriosis. Okay. Who makes Lupron? AbbVie. So let's play for AbbVie. But that's it as far as that's concerned. Anything else going on in the news that we need to see? So let's go to social and see if there's anything popping up there. This is big for Twitter, Snapchat, Pinterest, Facebook, guys. The clarification on Sector 230 is a big deal. This is a big deal for space and Tesla. I'm actually gonna take 2 seconds here and put this on for my kids downstairs. NASA. Okay. I want to cast that. Just give me a sec, guys. Don't want my kids to miss this. I will definitely be watching this afternoon. How do you handle losses? So typically I exit at 15 to 20%, depending. I set strikes. Other than that, the majority of my positions, I am through the last 2 months, I'm batting about 90% on my positions as far as a win of some kind. Now, I don't always see the same amount of gains that I would like to have seen, but I'm typically seeing. I'm hoping for plays that are looking to double the positions that I take, but I am willing to exit at 20% gains or 30% gains. So I may not always hit my mark of doubling up on a position or 70% gains, 60% gains, but I am looking to take a profit. So I did have one play that I exited at a loss, and that was just so I could get into another play that was a win, but I still have to count that as a loss. So, Yeah. Typically, my DD on bio right now is pretty good. It's pretty good. Okay. Let's see what else is going on out there. No, that's not it. Um, Launch America. I think Tesla goes nuts. Not at all. Email from Michael. Thanks for swinging through, man. I appreciate that. I do this due diligence every morning, 4:30 a.m. through 7 pre-market as well. So if you can't make it, I always put it up on YouTube as a video that you can catch after the fact. So make sure that you're subscribed, you've hit that bell, and you'll get notified when those videos go live. But thanks for swinging by today, man. I'm glad to chat with you. Let's see what else we got going on. Guys, this is powerful, this speech. If you didn't watch it, watch it. I've retweeted it out, but we are PST. Yeah, so Pacific time, you're definitely not going to be up at 4:30 my time, unless you're going to bed at 1:30 your time. But the videos are definitely there for you. So okay, so De Blasio comes out and is blaming Trump for the protests. Everybody else weighs in, offers their opinion. That's not much of anything. Mm, this push for people to vote is a good thing. I would love to see more and more people hitting the ballot boxes and sharing their opinions of where the government's at. A lot of people are suspecting that that may go to a Democrat side. At least that's what the mainstream media is saying. I think that they're going to see a much different result, but time will tell. This is bad. A lot of space news here. Very little about the riots at the moment, but I imagine we see more about protests and riots into the evening. Um, the Amish are coming together behind the George Floyd stuff. That's kind of cool to see. Is this interesting for me? Yeah, it is actually. So I like to peel things apart and understand what's happening and understand why they're happening, and then understand how that's going to affect the market. Understand how people work, how people think. For me, that does actually get me pretty interested and pretty excited about what's going on. So when I see things like this, when I see speeches, when I see, ooh man, yowza, that man does some pull-ups. Yeah, breaking down the news and stuff, it's interesting for me. And there are people that are in here doing this with me every morning for 2.5 hours. They do this for me hours and hours every day. The people that I hang out in Discord chats with for the entire time the market is open, just breaking down news and what companies do and what it's working with. As somebody who's been in business for over a decade, for me, it's really interesting to understand how businesses are working, how people are relating to the businesses and relating to the communities around them. So it's definitely not for everybody, but for those that are in the market or for those that are in business, there is definitely something of interest to it. This is an interesting article. So this is an interesting concept. Out of Switzerland, they've said that you can't go back to doing full contact sports, so judo, boxing, wrestling, you can't have that. However, the sex work industry in Switzerland is a go. So it's interesting to see that kind of. I wonder what the thought process is there. Um, judo, I understand you're going to be up close, and wrestling, I get it. You're going to be up close and whatnot. Boxing, I'm a little less sold on, just because there's not really any physical contact per se, as much as there's brawling. But this is close, sweaty, intimate stuff, exchange of bodily fluids. Like, this is everything that's wrong as far as spreading the disease. So that they're greenlighting that, questionable. I'm not necessarily arguing here that they allow these, the judo, boxing, and the wrestling, but this one is questionable. Have you ever gambled? Yep. Yeah, but when I go to gamble, when I go to a casino and I gamble, are you asking about how I play in the stock market and take a gamble, or are you talking about, like, have I ever gone to a casino? Either way. Okay, so as far as a casino goes, yeah, we've got a casino in Hull. It's just outside of Ottawa here. I've been there with my wife a few times. When we go with a set amount of money and we just stay until it's gone. And that's the hope of it, is just to go and have a little bit of fun. It's not about making money, it's about just having some fun. Now, in the market, I really try not to. I really try not to gamble. I really try to do my due diligence. Now, do I have plays that look like gambles to people? Absolutely. IMMP and East.ca, not IMP, iPix. So these ones here, 17-cent stock and a 7-cent stock. Most people look at the portfolio and go, that's gambling. Maybe for you, but I have done hours and hours and hours of due diligence on iPix as to what it is, what its drug is, and why I see the potential in it. As far as East.ca, I'm playing less on the value of the company and more on understanding that an FDA approval for sanitizer is a big deal, and that this is a smaller company that isn't necessarily profitable all the time. For them to get this approval is a huge deal. So that's my thought on that. I try not to gamble when it comes to the market. I try to make sure that I lead with solid due diligence, and that's the priority. Opinions on the semiconductor sector. Okay, so tech is going to emerge in a big way out of crisis. We know that innovation is going to fly. 5G is coming out, so anything that has processors, semiconductors, tech industry is about to look really solid. Now, as far as that goes, the big question is always for people: which of the three do you like more? Right? Do you like Intel? Do you like AMD? Or do you like Nvidia? Um, I guess MU is another one you put in here, Micron, right? Okay, so I think Nvidia right now is overpriced. I think we actually see a bit of a deflation. There's too much air in the tires on that one. These ones all here that are kind of grouped together, I think you're getting about a six and a half a dozen. I actually like MU the most out of these. I think Intel has a little bit of room to run. AMD has a little bit of room to run, but overall, I think MU is probably my favorite of the three. That's just my thoughts on it, though. Now, NVIDIA did release an AI card that is meant for more enterprise use, which is a lot of good money in enterprise use. But yeah, overall, I think I like MU the most in the semiconductors. We've got 5 minutes left on the stream right now, guys. I might be back later. I'm still wrestling with maybe doing a Twitch Sing broadcast sometime this evening. One and only Stephanie T. Thank you so much for the follow. I appreciate that. Yeah, so tonight I might be back. I might do a Twitch Sing stream just on Twitch, but we'll see how that goes. What do you think about George Floyd? Okay, so what happened to George Floyd was absolutely criminal. The video evidence shows nothing to contrary. That the three officers who stood by and did nothing are immediately fired and not part of the force, I absolutely agree with. That the officer has been charged. I thought maybe it would be a second degree charge, that it's a third degree charge. I mean, it's just a step above manslaughter. I think there could be a claim of second degree that should have been placed, but I'm not a lawyer, I'm not an attorney, I don't have the ability to say that. As far as the protests go, there are protests happening in cities that I absolutely support 100%. The people that are protesting in the streets, that are walking, they've got signs, they're chanting, that Martin Luther King style rally. I am all for that. I completely support people having the right to assembly, the freedom of speech, and using that in order to get the message across that this is unacceptable. This cannot be tolerated. I am all for that. Now, for those that are destroying, looting, and burning things down, whether that's people that are just infiltrating these protests or Antifa members or all of that stuff, that If you are burning down buildings, if you are lighting things on fire, if you are destroying property, or you are injuring people, you are in the wrong. The officer that killed George Floyd is in the wrong. He committed a crime. He committed murder. He should go to court for it. If you're burning down buildings, if you're lighting things on fire, if you're stealing and looting and raiding small businesses in your communities, that's also a crime, and you should be arrested for it. That's my thoughts on that. So if you're breaking the law, you should go to jail. If you're a peaceful protester using your right to freedom of assembly and freedom of speech, I'm 100% in your corner. Do you know what trading website I can use to get a hold of more stocks? But I am in the EU. In mine, there's only 1,500 stocks. You mean, Techie, do you mean trade more stocks, or do you mean, I'm trying to understand, you want to be able to trade more, or you want to be able to look at more? If you want to look at more, Koifin's a great tool. If you want to trade more, I recommend Interactive Brokers. I believe that is available through most of Europe, and that will allow you to trade the international markets. So I'm a Canadian. Typically, if I was just a Canadian, I'd be able to trade on the TSX. There's not a lot of volatility on the TSX. It's not a huge draw for me. So I really enjoy trading the U.S. market, so I do have an Interactive Brokers account. I do have a TD Advanced Dashboard account that allows me to do the majority of my U.S. trading. Now, TD won't be available for you as you're in Europe, but I think Interactive Brokers is. They will also allow you to do options plays on top of. Interactive Brokers is a prime brokerage. They'll let you do just about anything from forex to advanced option plays to high risk ETFs to equity trading. They'll let you do pretty much all of it. So if you go there, check it out. I think there may be a slot where it says who sent you here. So if you consider using them and you would like to give me a shout out for sending you their way, I think there's some kind of affiliate program that they have where they go, yep, thanks, Millennial. But yeah, let me know if that's of interest to you, or just give me a shout out when you sign up if you sign up. Okay. I don't know that I have anything else to really cover today, guys. So if you guys have nothing else you want me to look at, I might wrap up the stream. But if you do have something you'd like me to take a look at, throw it out there now. Unfortunately, I don't have an affiliate code. They just want you to share your... Just tell people what the email is that's attached. So I don't mind putting this out there, guys. This is like a spam email. So anything that I see that comes in that's inappropriate just goes in a spam folder. It's not a huge deal. So yeah, if they're asking for the email of whoever sent you, like that's the email that you could give them. But otherwise, yeah. Is there anything else that you guys would like me to look at as far as the stock market goes? Whoop. No? Well, thank you so much, everybody, for swinging by today. I had a blast. I love doing this. Again, I will be back Monday morning, 4:30 a.m. Eastern Standard Time, to give you a pre-market analysis of what I'm looking at, what happened over the weekend. We'll break that all down. If you guys can't get up at 4:30 in the morning, I understand that. So typically I'll stream from 4:30 to 7 a.m. and then at 7 o'clock I'll put a rerun on. So that'll be from 7 till market opens at 9:30, and that'll be there for you guys. If you're not already following or subscribing, please do that so you get notifications when I show up. Thanks so much for swinging by, guys. Have an amazing Saturday. Enjoy the NASA space launch. Don't miss that. I will catch you.